Hello and welcome back to Dukascopy TV. As we all know, the euro crisis has really affected the performance of gold at the moment. Over the last few months, it has been quite volatile. Today I'm joined by Thomas Wilson from Sirius Commodities here in Geneva to discuss his views on how gold is performing at the moment. Welcome, Thomas.
Thank you very much for having me on the program.
No problem, it's great having you today here. So first of all, how is gold actually performing right now?
Gold is actually rather disappointing compared to what spectators would expect with such turmoil in markets both in Europe and across the world. I think a lot of investors were expecting to see fresh highs and a lot of speculators going into gold to find value and refuge in that market. The current situation with the US occasionally having bouts of quantitative easing has certainly put pressure on precious metals and gold in particular. And unfortunately, this looks likely to continue for a little bit of time. However, I see this as a blip more than a trend. I think that the fundamentals of gold and the value of refuge that gold actually always has been in the past and will be in the future will come back and actually rebound. So the market, my expectation for the market is for much stronger prices in the medium to long term.
And there's a lot of talk about bailouts right now. So how do you think gold will perform if Spain and Greece get a bailout by the end of the summer?
First of all, I'm far less positive about the possibility of a bailout. I think that it's all a question of definition. I think both Greece and Spain should have been bailed out a long time ago if they really wanted to stop the bleeding correctly. And I find that the situation now is more band-aids being put on a wound rather than actually getting rid of the problem. As a result, I think that if anything, investors will find and see that gold is worth going back into. I see a growing number of people today looking at gold. I see a growing number of clients calling us up and asking, especially for physical gold. It is much more the physical aspect rather than the paper aspect that actually is attracting people. And I think that as the market comes off, the order books that people like ourselves and other companies have seems to be growing rather than decreasing. So I actually am very positive for what the market can do. And I think that this bailout of Spain or Greece will have very little impact. If anything, I think that we've already started a bit of a trend towards a real big redistribution of money into the gold market and into precious metals in general.
And what is demand like in Asia for gold right now?
Asian demand is softer than expected. Clearly, the weakness of the rupee has caused a massive problem. India being today the second largest consumer of gold. India has had consumption of up to 900 tons per year. It looks to decrease to about 800 tons this year. And I think that this weakness has been a problem. We also now have, of course, monsoon, and we have a lot of people waiting to see what's going to happen. 60% of demand in India comes from the peasants and the people in the country who look to every year add some gold to their portfolio. It's not even a portfolio, it's obviously a family heritage, an heirloom. As a result, a lot of people are nervous of what is going to come in the next few weeks. Indonesia has also suffered from the same problem. Indonesia is also a very large consumer of gold and has exactly the same problems with its currency. Now, facing that, or countering that rather, is China and Chinese demand. In the first quarter of this year, Chinese demand was roughly 250 tons. Obviously, at that rate, China becomes the largest consumer by a long shot, and that demand was for jewelry as well as for investment. I think Chinese demand is only now starting to come into the limelight. I think that will increase. I think the Chinese appreciate gold, have an understanding for gold, and we've seen again in those famous order books I talked about earlier that Chinese buying is there sitting below market in considerable size and will give a very strong support to this market and will counterbalance any weakness in other countries.
And where are most of your clients from?
Well, worldwide actually. We've been for the moment focusing a lot in Switzerland. Obviously there is a very strong investor community here. But due to my background and my spending years in the banking world, I know a lot of people in Europe, in North America and in Asia. and everyone is interested. Again, because we've specifically concentrated on the physical aspects of precious metals and on gold in particular, that is a part that is today very much interesting the investor. Rather than have a paper contract, they would like to have a gold bar somewhere that's allocated to them with a serial number that they can recognize. In case of a crisis, they can go to the vault and pick up that gold bar. What we then add is that we have found a way of bringing value to a gold holding whereby someone who has physical gold can get a return every single month. And that is, I think, the unique feature that we offer today to clients.
Thank you very much for that. And what is your outlook for gold for the rest of the year?
I would say for the summer, I would look at it in two parts. There's the summer sort of quietness that often exists. The French and a lot of Europeans go on holiday. The monsoons we've talked about, and that will sort of slow down demand a little bit for the next few weeks. But I do believe that as we come into the last quarter of this year, demand will return. I remain extremely positive towards gold, so neutral for the moment towards it, medium long-term bullish. I think that gold could very likely move back to the highs, and actually once that happens, create new highs, as a lot of speculators such as CTAs and hedge funds have actually shorted the gold market through the futures markets, and therefore would be the next likely victim, if you want, when the short covering rally takes place.
Now let's look at silver. What are the downsides to silver right now?
Well, silver, if we talk about gold being a lackluster performance, obviously silver has been a rather disastrous performance considering the highs that we had and where it is today. Silver is one of those very strange metals. There are two camps. There is a camp that believes that silver should be at $50 an ounce and doesn't understand why today we're down at $27 an ounce. There is a second camp that sees silver as a byproduct of other mainly base metals, and therefore doesn't understand why silver is at $25 in the first place. I think that the truth of silver lies somewhere in between the two. I think that demand for silver today is increasing and will continue to increase, and I think that demand will outstrip supply. I think that because of the low price of silver, the likelihood of new production coming online is very unlikely. In fact, virtually impossible. And therefore, if supply really picks up as strongly as I believe, I think that silver will go very quickly back up towards $35 and start testing the $35.50 range. Will it create new highs? That is another question. I think the market is very sizable, but we should look at the different demands that happen in that market. For instance, if it's solar panels or it's medical, in medical there's been a lot of research, including silver. And in fact, in America, the Patent Office of America puts more patents down for silver products than any other metal put together. So I think that silver is certainly not a metal to discount, and I would certainly recommend having both silver and gold in a physical portfolio.
Thank you very much for coming in today.
Thank you for having me.
Thank you for watching Dukascopy TV. Stay tuned for the latest press reviews and exclusive interviews, but for now, goodbye.